for that candle, we take the 1 to 5.33 and call it a day. So 1 to 6, 1 to 5, and a -1. 10-hour day. That's not too bad. Refining. Hey trader. All right, so we're gonna go through some practice. So I'm gonna take this one fairly slow and easy. We are setting up our charts. So we're gonna look at our daily time frame. So we're working on the price action on this day, the Friday. We'll take a peek at how that shaped out. But step one, we are setting up our daily time frame. So when Thursday ended, we're looking immediately to the left and up and down to see which PD arrays are currently in price. So we've obviously got some liquidity all over the place. Let's add in our ears open. So right now we're gonna jump into Friday. So with all of our arrays set, we go down into the one thing is always a higher time frame. So this overlay just maps the monthly candles over top, so we can see the formation of a monthly candle through daily candles. This is a down close month, up close month, and as we've been watching before, we saw once price shifted, market structure here. So if this were candle basis, so actually I'll just go up to the monthly. Let's take this off. So once price shifted, this became the order block of interest all the way down to the mean threshold. But we had sell side sweep, market structure shift, choppy candles down, choppy meaning down candle, up candle, down candle, up candle instead of consecutive ups, right, or consecutive downs. So this was simply a retrace after this market structure shift coming into this order block, and we're now looking in the month of April. So that's where we ended up on the daily, looking at this price action. But I like to look at the daily candle price action with a monthly overlay. So here is that order block after that market structure shift. Choppy candles coming down. Price wicks into the order block here. And then as price is moving away, we're looking for buy side targets to the upside. So now that we've got that out of the way, understanding that our bias on a higher time frame is bullish, we'll go down into the hourly. And we're using that higher time frame narrative as we get into the day. So for this week, we had a Monday low, which again dipped back into that yearly open. Price pushes above. We have an order block down here that gets tagged very quickly before price moves away. We have an H1 order block here. So these consecutive candles. We could also look at this as the H1 breaker block here, or we have an H1 order block here. So when price fails to close below that low, we're maintaining our narrative that we had all the way from the monthly chart of being bullish. Now, just because a narrative is bullish doesn't mean that there are not going to be meaningful down days. And I've put this in replay mode up to 3 AM to see London's price action. to really practice the skill sets for setting up the day. So as we're practicing setting up the day and marking out the charts for the day to come, so that is to say, looking at this, oops, that's not going to work. Looking at a price action here, one thing we do first is mark out the new day gap using electronic trading hours. The price closes there. Price opens here. I like making the top of the new day opening gap yellow, just so I can tell the difference when I'm on a lower time frame of where's the top of the new day opening gap. We also are looking at the previous day's range. So price came down into this order block, tagged it at 9. Pretty much the whole day was our run up until 2. So this dealing range from 2 till 4, we're looking at using premium and discount principles from the impulse leg out. We can see that we've got a fair value up there, and from the full swing to the full low, we have this fair value gap. So we'll do a couple of things with this. And again, the idea is to set up and practice framing the day for the PM session. So this is a discount fair value gap. This is a discount order block. And another discount fair value gap. Now we're going to use these, but I really don't start setting these until after the opening range, meaning close to 10:30. I want to start marking these out. Because there's, you could mark out every single fair value gap, but I'm really only looking for discount setups because my overall bias is bullish. The other thing I'll do here is I've got an old high that splits a fair value gap. So I like where these reference points split. Another array, so we'll set that up as an old high. Now we go down to the 15 and verify the new day opening gaps match. Have any large discrepancy, I'll use the hourly. So you can see that through Asia, so here's midnight. Let's take off this fib. Through Asia we had some consolidation, so we're looking to see where will price gravitate to. We have this old high that we're going to reference. So waking up before the opening range and doing top-down analysis just like I did just now. Start off on the monthly, go down to the daily with a monthly overlay, and then from the daily start marking out hourly. So back on that daily time frame, just to go back one more time, the arrays that we're looking for from a immediate, so like the most previous 3 days to the most previous 20 days, looking to see which arrays are relevant. And then the most immediate from Thursday, really not a lot of arrays here. So back down to the 15. And we're looking now at a 5, and now we're starting to mark out the day. So if in the morning you want to be able to do that by about 4 o'clock, that's step number 1 in terms of markups. And then we start, we let the day begin. And particularly around that 5 o'clock time, as London AM call it, is done, just watching to see how price will play out. Yeah. So here we go. Pause that here. So we have price coming down. We're noticing that it tags into the order block. And then we had these consecutive green candles. Now this is a London trade, pre-New York. So we'll do a quick SMT check. And we mark out our low, or we find with our cursor the same swing point. All we're doing here is keeping tabs, and once we see something like this, then, which is the displacement, that's the thing that really triggers any interest, right? So we're coming down into a POI, then we're seeing a displacement, and we're saying, all right, my bias is bullish. Here's my displacement, which is this low, just put straight horizontally. And we find the same low, and we can see that we've got a divergence. SMT on S&P. This is the SPX 500 CFD, and this is the CFD for US 30. I'm using this Black Bull feed. So what we have here is an SMT. And that is part of the confirmation that we're going to use in this. So displacement, we'll be looking for a setup on either the mitigation we also can see a fair value gap. We have another one down here. So if we're setting a long on the mitigation, we'd have to factor in the low, fair value gap. In terms of targets, we're bullish. We know that all these little step downs here, liquidity gets formed. So I'd want to see something coming back up to that previous range high. Marker. Which is our buy side. It's gonna drive me nuts, eh? There we go, got it. So this consolidation through, this is from midnight. We see price driving lower. We want to see it drop into a 15-minute array, which is inside of this breaker. Excuse me, this order block. And profiles are my jam, man. Profiles are everything for me right now. So this profile is looking like this, where price just runs soft from midnight. So it doesn't run up to run down, it simply runs soft into a 15-minute array. And that is this profile here. So let's get rid of that. We know we have our SMT. So let's just shape this up using midnight, right? So here's midnight price, wake up time, start marking out charts. We've marked out everything, so we can delete that. Midnight, 8 p.m. 8 p.m. This is the highest point from 8 p.m. to midnight. So if that is our Asian range, this is our Asian range, 8 p.m. to midnight. We're expecting at 2 p.m. price just runs soft. Now when price runs soft like this, you can have one of those scenarios where you'll have that run. So the profile is either this one where price runs soft and it continues to run soft. The alternative is this profile, where price opens up, dips, like it has a small move up after midnight, shifts down, and then the rest of the day up to noon New York. So all these are doing are precursor profiles, what we're gonna use for the intraday and the indices. So right now it looks like this has been running down. It may test higher and then run lower at least until noon. Now whether we clear the high or not is yet to be seen, but we certainly have a lot of that London movement. So if we are dipping down, we'd expect a run up until about noon. If we roll soft, then we would not get above these highs here. We would be looking for this fair value gap to hold, this fair value gap to hold, and possibly coming back up to the midnight open price. So once we're entered on this trade, we're looking to see price action move. So what we have is dipping down into a 50-minute order block, refined to a 5-minute order block, SMT on the lows, market structure shift, SMT on the lows, mitigation, these green candles here. So this mitigation block is where we'd enter on price. And we're now watching to see what's the reaction. Are we seeing follow through on this fair value gap or not? So I'll pause it here. We can see that once we close cleanly above, now we're coming back to where are the arrays? That's your discount array. That looks like a good move. Midnight open is where we'll be testing next. And then we look to see it get above Asia, get above this buy side, and we're starting to get closer into that New York opening range. That's our framing up here. So let's see how we react. So we have candles closing cleanly over these fair value gaps. Order block gets tested. Trade is done. That's 1 to 6. So we're starting to inch into 730, which is a whole other fractal of price. So if we're holding this trade, we either set to break even, potentially if we're looking for any continuation run. Otherwise, we're closing up shop. So between here and here, 730 to 830, just waiting to see how price kind of forms up. Do we get any fair value gaps? Do we get any arrays that we can work with, right? Once we've done price action through here, we get into that time where there's a bit of a crossover. London traders starting to take lunch, New York open traders starting to wait for the opening bell for the AM session. So now in this window of price, news embargo forms, we're starting to, like I said, eye up situations where we have fair value gaps. So let's do that. This is where you see a buy side sweep. We see a fair value gap here. We're framing for PM, but we're tracking everything, right? This is the whole point. The journal entries are intended to continue to sharpen your price skills. Balance price range in here. Mark that out to 11:30, 11:45, 11:45. Okay, so two structure shifts. Two. So coming back into this fair value gap, not using 930 to 10, but more looking for 10 and on, which is what this line here. So where we are now, we've done our framing top down, we've done our new day, new week is way down below. We're waiting for the opening range to form. And we're looking for where is the draw. So we got some sell side liquidity down here. We're coming up to 9:30. Here's 10 o'clock. Let's pause there. So at 10, we can see that coming in for that aggressive price move. Not too surprising that we went short. We also had some news at 10, which is another good reason to leave this alone. Whew, yawning. Wow, that was a yawn. So really just letting this whole time fractal play out, because we want lunch. We want to get to the PM session. That's really where we want to go. But we have to see what the AM session does to be able to select the right profile. So we do get this fair value gap test. We do get the buy side being protected. That could be a trade, not mine, but could be. So now let price play out, and we're looking at this 10 o'clock to 10:30 leg. That's a trading leg. So let's be more specific. We can see, so this is now done. We'll need this. That SMT on the mitigation, nice delivery to buy side. One more run, started to break down. Retrace back into the trading range. Displacement low, right at 950. 950, price just runs. We go back to this old high, which we had marked out from the hourly. Price retests it. These type of movements for me, when you can't get in and there's no real ability to like get a sense or get even a piece of price, I don't sweat it. I just start marking out my framing. So here's 930. I'm gonna want to hold on to that. 10 o'clock's done. Don't need to mark that out no more. So no, those previous 15 and 1 hour arrays, this is where I'm watching to see at what point do we start to get close to these arrays. I don't want it too early. I want it to form on the latter half of the AM session. So let's go up to that 15 minute. I want these arrays to be tagged later in the day. So here's his 11, really looking until 11:45. Delete this now. So 15-minute arrays, we have this one. (15-minute arrays). We have this one. And that price level there. Then we have this hourly order block. So we're waiting for time. So let's see, I want it closer to 11:45. So here we go. Pause. So this is now 11:15. Let's keep going. One more candle, 11:30. Okay. So now we go back down into the 5, and we need to reference this old low as sell side. So order block gets tagged. We're coming into 12 o'clock now. We're looking for that lunchtime macro. We're not acting as yet, but what we have is a slowdown coming into some of these arrays. And on the hourly, this is more interesting to me down here. But let's go back to the 5. So we're waiting. We want to see what does that slowdown look like coming out of lunch, right? So choppy. On a 5-minute, we do have this volume imbalance. And I know we're in lunch now, so I can take this out. This is the end of lunch, 1 o'clock. I'm just waiting for a market structure shift. And this order block is completely taken. This fair value gap is completely taken. I'll just move them back. Okay, pause. So we tagged down into this fair value gap. Didn't quite get to the order block. We also got to that institutional order level right on the dot. So that is specifically where in a fair value gap let's say that, you know, this is a candle, a candle, and you have a wick, so another candle somewhere over here, preferably a down candle with a wick. That splits a fair value gap. So this fair value gap from this candle to this candle So when you've got this down candle that splits a fair value gap, this is the pattern, right? This is the price path. But what the candles actually look like are this, which was that 15-minute split right here, where we have a fair value gap, but a wick high, preferably a down candle, that splits the fair value gap. That's what I'm working on. So when price touches in on that on a 5-minute, I want to see a market structure shift, even if going on a 1-minute. We can see we've got market structure shift, 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 consecutive green candles. This is a easy peasy lemon squeezy type of setup. And let's see what price does. So I want a, again, bias being bullish. I am looking for along here. Now, if we're running up and our AM session was a down close, here's where we go back to those profiles, right? So let's just clean this up. Right now, what we're looking at is an AM decline. Pretty obvious. Opening range ran up, 10 o'clock and on ran down. After the opening range, we continue to slide down. But we ran into a 15-minute array below the sell side and into this 15-minute array. So the relevance of this 15-minute array is more than anything here. It is below sell side, and we're still within that trading range from earlier that we spoke about. Swept higher, didn't continue. No continuous candles. So up candle, down candle, doji, up candle, down candle, and then we're back below this buy side. So this trading range is still holding, and we're looking at the discount of this range. And now we're at the PMs, coming up to the PM session, and so we start comparing our profiles. And a profile that has a AM decline and a lunchtime move back up will often stop or consolidate into 930, the opening price of the session. So we either see a pass through, pass down, a pass up, and then just basically coming back to 930 to end the day. Or we might see a run up, run down, run up, and then close off the day. We're also still working on this new day opening gap. This is the low. This is the high. So I want to set a target at new day opening gap low, 930, new day opening gap high. I'll set it here. No, I'll set it at 930, just below. And let's validate our profile observation. 12 o'clock, simple liquidity, high, low, run up. So let's see, we are looking for that return before we get to 930, and we're coming into the PM session shortly, so let's just watch. So nice move out, testing back this volume imbalance. Ooh, just missed it. I would reset this trade on this price action to this low. So let's pause there for a second for the journal. So price comes down, makes a more meaningful tap into that institutional point. Still doesn't come down into the order block. But that price movement where it just gives those wicks, I would go back in, setting my stop below the new low, same target. And the reason is that simple lunch liquidity is not indicating a down close day. So if we're not doing a down close day, we're either doing a reversal or a consolidation. A reversal can go past 930, a consolidation would go to 930. I'm okay with either one. So here we go. This volume imbalance still seems to be holding price down. Okay, we're back at entry. Okay, it's nice swift rejection. Yeah, let's pass this volume imbalance now. We have this old high, which could serve. And we're in the final hour, so a couple of things to note here. 3:15 price tags in. 3:30 it's runaway time. So this would be much more likely to get to an old low here. And that would be a 1 to 5. So one stop out, one win up in the AM session, one stop out, just a wick too short. That's another thing I wanted to check was SMTs. Not much here. So here are the two corresponding lows. So lunch is done. So we take our low, go horizontally, take the same low, go horizontally. So both pass through, no SMT there. What about the highs? An SMT, same highs, nothing crazy. No SMT, that's fine. Still working the setup based on US 30 price action. So here's a scenario where there is a fair value gap, there is one in between. So price respects it. Bodies stay above, which is great. Stop would be below the swing low. And I think we'd be getting to the old low or till 930. Let's see how we do. Actually, I like this new day opening gap better. So there's the old low getting tagged. And pause time check. So 640 is time to close up shop. 440, excuse me, and 445. Definitely close up shop. So even if we came out on the low of that candle, we'd take the 1 to 5.33 and call it a day. So 1 to 6, 1 to 5, and a -1. 10-hour day. That's not too bad. Refining these. We'll just continue to work on this until we get a little bit better and better. Alright man, let's do it again.